Hi guys, today's video is all about investing mistakes. So these are my top 5 investing mistakes and let's get started. So number 1 is day trading. Now if you don't know what day trading is, it's when you start investing, you buy one stock and then when it increases a bit you'll sell it, and then it's buying and selling of stocks basically frequently. Now people have made millions doing this. But when you don't know about it, if you check the statistics, it's something like 76% of people lose money doing this kind of buying and selling. It's highly likely you will lose all of your money or a large part of it, just because when you're starting out you don't know, and you can think that you know everything about the stock market. You've read a few pages online, but really you don't know. You're not a professional stock, you're not an investment bank or anything. You don't really have any experience with this. So that's one way that it's a big mistake a lot of people make, is they just start going on there buying and selling stocks and things. Often it starts out with them earning a couple of $100 or something, and then they lose everything, and then they've got nothing to start again with. So just be wary of that. Number 2 is not having an emergency fund. So an emergency fund is basically a couple of months savings. If you kind of have a problem in life, if you lose your job, if your car's broke, you need a new one, you need repairs, that kind of thing, or you've got to move house, whatever it may be, it's just a couple of months' wages saved up there that you can use in an emergency. Now this is important, because if you invest all of your money in in the stock market, and then you lose it all, which can happen. There are crashes overnight and things. Usually the stocks recover and that, but it can happen where you lose a large portion of your money, and if you have no other money saved up and then something happens, then you're going to be in problems. So you should always keep some money in reserve and put all of your money invested. You should always keep a bit of cash in case the worst happens. So number 3 is not investing long enough. So when you're investing in stocks and index funds and that kind of things, it's not about if the stock loses money for a month and then you take your money out and you just sell it, or if there is some sort of crisis in the world, as we've seen recently, or a problem with a certain company, and the market just crashes down low, and then you panic, think you've lost all your money and sell everything. That's it's a bad decision. It's a decision that a lot of people make, often foolishly. And when you are investing or starting to invest, it is for long term. The money you put into an index fund, for example, it should be staying in there for 20 years, 25 years. You shouldn't really be taking any of that money out. It's just about adding to it, and the value going up over time, and receiving those dividends and that going up as well over time. It's not about the stock's performance over a month or even over a year. It's about longer term. So when you're looking at buying certain stocks, you want to look at the 5-year average growth and that kind of thing. You don't want to look at it day to day or just this month, this year. It's all about long term. So investing's not for a short amount of time. You're not just going to put your money in for 3 months, make a fortune, take it out, and that's the end. It's about investing long term, so that when you're older, you've got some money there, to live off, really. And bringing in that passive income, of course. So number 4 is not investing enough. So this is another mistake as well. Obviously when you're starting off, you're not that confident in investing in things, and you may not trust the process 100% if you're not used to it. But investing, you need to put in a good amount, really. Once you've got started, once you know a bit about what you're doing, in those index funds you need to be putting in a large amount of money. This is because if you just save money in an account, say you save I don't know, 500,000, and then you retire. Well, that 500,000 in 20 years is not going to have the same value. With inflation, money loses its value. Everything will be, much more expensive for you. So if you put that money into, an index fund, you'd have been getting that passive income every year. The value of the shares will be going up every single year, and you'll be in a lot better position. But obviously, if you're just putting in a couple of dollars here and there, you need to put in large amounts in order to earn a large amount. So if you can, $1,000 a month is an excellent amount to invest. If you can do more, do more. If you can't do that much, then 500. But really, 500 should be, the minimum that you invest in each month if you want to if you're thinking about living off of, your investments when you're older, it's got to be that sort of amount. Otherwise, it just won't cover your living, not until you die. So it's important, to invest enough, and if you don't invest enough, you're going to be, when you're 70 years old, you'll be looking for a part-time job. So that's one thing there. So number 5, another mistake is waiting too long to invest. Some people are waiting, I don't know, for Christmas, whatever it may be, to start investing. But if you start investing now, the prices will the value will start going up. The dividends will start going up. You'll start earning passive income. Yeah, not a lot, but you will start earning. Now is the best time to start. If you just keep waiting and waiting and waiting, you'll look back and realise how much you could have earned in sort of capital gains. The growth of the actual stock, and in dividends, in that passive income as well. So that's a big mistake. You need to start. I mean, these days it's easier than ever to start investing. I mean, before it was online accounts on certain websites, and you really had to look to find out about investing. But these days everyone knows about all the applications. They're everywhere now. On every YouTube video, basically, they're in the publicity and everything before the video. There are advertising everywhere. We all know Robinhood. What's another one? eToro, Trading 212. There's loads and loads of platforms these days where you can invest. So there's no excuse not to start now. I mean, you can start with like $1, I think, in the account. So just download the app and get started, and don't leave it too late. So thanks for watching, guys. They're my top 5 mistakes for beginners, in investing and things. So give the video a like. I'll see you in the next one.